This is Reuters, I'm Axel Threlfall. Today marks the anniversary of the five-day war between Russia and Georgia. 1 year on, investors still recall the panic and sharp sell-off in financial markets. $7 billion taken out of Russia immediately after the conflict broke out, sending Russian stocks and the ruble tumbling. With foreign investment in Russia still significantly down, have investors been unable to shake off the memories of last year? For their thoughts, I'm joined by Natalia Lashenko, senior Russian analyst, IHS Global Insight, and joining me from Moscow, Kevin Dougherty, portfolio manager of Pharos, one of the biggest investment funds in Russia. Kevin, let me start with you. How short-term are investors' memories?
Well, investors certainly do have short-term memories about some things, but I would say that the Georgia war was not really a major influence drawing money out of the market and out of Russia last year. It's really the global financial crisis that kicked off shortly thereafter, and also the dramatic fall in commodity prices that happened over the same time period that for investors in the Russian market are much more important factors.
So you're saying political risk did not play a role in the huge outflow?
Well, I would say the political risk that was more important was actually, if you recall, about a week before the Georgia war, the Prime Minister made some comments about sending a doctor to the owner of Metchel, the giant steel company. And we saw the market sell off 10% on those comments. And quite frankly, it was an equal sell-off that we saw in the few weeks after the start of the Georgia war. So for investors, they're much more concerned about the domestic political environment in terms of relationships between the government and business rather than any external problem.
All right, we'll come on to the fund in just a sec, but Natalia, let me put that to you. Do you think domestic political risk, not the war, was resulted in that outflow?
Basically, Russia definitely suffered reputational losses after the war, but they were mostly with the Western public and probably the investors, the portfolio investors, rather than those who actually come into the country and set up businesses. I think those people, they were determined to come or to stay, and they did. It's just the whole international foreign perception of Russia has changed, and that has probably affected some decisions, but they wouldn't be the major investment decisions.
To what extent have things improved over the past 12 months?
They have improved. You mean in terms of attitudes towards Russia?
In terms of attitudes towards Russia, in terms of the type of message that Russia is sending out?
Well, the message has become really dual. You have President Medvedev trying very hard to show a liberal face of Russia. And of course you have the Prime Minister Putin, who is, well, still brandishing some arms, although not as dramatically. He hasn't sent any doctor since then. But so there's been a slight improvement.
Are you, Kevin, are you less worried now when we look at the performance of the fund, the Pharos Russia fund? We've got the performance. We'll put that up on the screen. I mean, you're beating the benchmark by a long way. You're still off 9.6% over the last 12 months. Are you less scared now of this market than you were 12 months ago?
Well, we're more scared of the global financial crisis than we are of anything domestically. The Russian government has huge reserves that they're putting to work in their anti-crisis plan, but it's problems that may recur in the United States, or perhaps if we see China stumble and the massive demand out of China that we've seen over the last 6 months, if that is to be removed from the market, that's going to have a much bigger impact on the market here.
Where do you invest in Russia right now?
We're in a number of different areas. We do prefer big state-owned companies that have secure access to funding at often preferential rates. There's some other sectors we're looking at. The metals and mining sector has been very, very interesting and very volatile recently. The sector was experiencing huge problems post-crisis, and all of the Russian steel companies went down to about 60% capacity utilization. They've increased that, and in the last month, they've all gone up to near full utilization. And if those companies are able to maintain those levels over the rest of this year, then that's going to have a hugely positive impact on the Russian economy and on those companies' share prices.
Very quickly, what about investments in other regions? Georgia investment, I believe, down about 75–80% on the year. Would you advise people to invest in Georgia?
If they have a strong stomach, because there's a lot that can still happen there. I think the risk-reward profile is better for Russia, and quite frankly, it's better for Kazakhstan as well. Kazakhstan was the first country in this region to really enter financial crisis, and they've already gone through a lot of restructuring. They may well be the first country to come strongly out of the crisis.
Natalia, throwing this forward, how real are the concerns of further conflict between Russia and Georgia, and do you think those are being taken into account by the market?
Well, we at Global Insight say that another war is very unlikely at the moment. At least there's no real intention or interest for both governments to have another military conflict. There's the high tension. They're trying to show off their sort of might. It's a war of words at the moment, but things have calmed down even during this week. So, bar any provocation on the ground and someone reacting too nervously, there shouldn't be another war this year.
Okay, Natalia Leshenko, IHS Global Insight, Kevin Dougherty from Pharos. My thanks to both of you. Do join our New York team throughout the afternoon for continued coverage of the US markets and, of course, reaction to the latest employment data. Thanks for watching. I'm Axel Threlfall.